All right, so now is 6 o'clock Pacific time, and my name is Shalom. Thank you everyone for coming here to our Summer Web Finance program. Today we are very excited to have Howard Lindsay, who is the VP of Institutional Equity Sales and Tradings at Goldman Sachs. He is professionally skilled in equity research, options, securities, asset management, and ETFs. So you guys are here for a treat. And without further ado, let's welcome Mr. Howard Lindsay.
Thank you, Shalom. Great
Of
name.
course. Thank you.
And thank you all for this opportunity to come before you and to share some thoughts on financial markets. Hope everyone is doing well. I guess you've been doing a summer of trainings, and I'm not sure what classes you've taken so far, but would love to hear a little bit about what you've done thus far. And just before I start, if you don't mind, Shalom. Is that okay? If not, don't worry about it. No worries, no worries, don't worry about it. I'll get into the financial markets. I know that I've done did a presentation at college out in the East Bay a couple of years ago, and this is an outgrowth of that. And so I appreciate the opportunity. So, Goldman Sachs, who we are and what we're about. Goldman Sachs is a leading investment bank, financial services firm. We connect people and ideas to help solve problems for our clients. We provide financial services in terms of providing investment banking, investment management services to a substantial and diversified client base that includes corporations, financial institutions, governments, and individuals. I think we pride ourselves on being excellent at what we do, being a leader in the field, an innovator, and a place where we seek to recruit people from diverse backgrounds who care about, who are interested in financial services and a whole host of other things. There are just so many ways that you can enter the firm, and many different roles that you can play. And so, the opportunity is there for you to see and to learn and to grow and to put your expertise or whatever your passion points are. And Goldman Sachs is a great place to put those skills to work. Are you going to show the slide deck?
Hi, we were hoping that you could possibly share the slide deck.
Interesting. A little bit of a wrinkle. Let me see if I can pull it up. One second. This may not work. So you guys, okay, I'll just go through the slide deck myself. Why join Goldman? The purpose in everything we do, we come together to help in the capital formation process. We seek to bring markets, industries, communities together. Folks need to raise money. Folks need to invest money, and opportunities to raise capital so that the economy can continue to grow and to expand, and also give people opportunities to find gainful employment. Goldman Sachs is a great place where you can come together, opportunities to grow, opportunities to expand. There's no set path in terms of how you get into the firm. Folks come through a training program or through, one-off hires, and move up throughout the ranks of the firm. And there are just so many different opportunities. Personally, I'm from just a little bit about myself. I am from the Bronx, New York, the son of a couple immigrants from Jamaica who came here in the late 60s, went to school in Connecticut, majored in economics and Afro-American studies, did a program called SEO, Sponsors for Educational Opportunity, summer leaving my junior year, becoming a rising senior, and did an internship at Merrill Lynch in sales and trading. Did some accounting internships prior to that. And when I walked onto the trading floor, it was something I'd never seen before. I played some football in college and high school, and it sort of reminded me of an athletic field. People coming together, doing lots of prep, and then executing on the field in the global markets each and every day. A place with a high level of adrenaline, high level of intensity, and just folks really competing to get business done. It's a really, just that whole environment is just really, really stimulating, inspiring. It's something that, you either love it or hate it, but once you get on there, it's just a really, really cool place. Obviously, different personalities fit in there, but it's the type of place where you have to be willing to speak, you have to communicate clearly, you have to be willing to process lots of information and make decisions quickly, and to be able to articulate reasons for those things. You have to have a love for markets, an understanding as to why things are moving the way they are. What's the S&P doing versus the Russell 2000 versus the NASDAQ? What's happening in the commodities markets, what's happening in foreign exchange, what's happening in the political world, what's the Fed saying? All of these things, in addition to the sort of micro stories that drive the equity markets, are really critical. And so you have to be able to process that information quickly. I would say that it's just been a wonderful experience to be working on the street. When I was summering in different jobs or interning in different jobs during college, I kind of felt like I needed something a little more exciting, a little more exhilarating, a little more stimulating. And so when I found the internship, I really found something that I really enjoyed. And so Goldman Sachs is a wonderful place, someplace that I would encourage you to look at, to consider, especially as you're starting your careers, regardless of your background, wherever you're from. If you really work hard and are determined, there are ways to get into the firm through many different doors. And so once you get in, you just kind of network and find your way around. We are committed to technology. So solving a lot of challenging technology and engineering problems in order to drive our business and financial markets worldwide. And so there's opportunities to bring, if you're an engineering type, you can bring those skills to bear, as we do hire a significant number of technology folks or engineering folks to help drive that business. We're committed to diversity. Diversity and inclusion is a top priority at Goldman. We know that the strength of our culture and the execution of our strategy and our relevance to our clients depend on a truly diverse workforce. Last year, the firm set forth aspirational goals and a comprehensive action plan to increase diverse representation at all levels and create a stronger culture of inclusion for all our people. We have a lot of work to do, but we keep striving, keep pushing. And I would say that, over the 15 years that I've been at the firm, there's definitely been a significant increase and commitment to recruiting diverse players from various backgrounds, both racial, socioeconomic, folks from across the world, whatever it may be, just a lot of diversity and inclusion. And that's not just for the sake of hitting a quota, but it's for finding talent, because there was a time when talent was limited to a set number of folks from a set number of schools, and that worked for a while. But in this very dynamic global marketplace, we need talent from all over the world and talent from different parts of the country and different backgrounds. And so it's an opportunity for folks to get in the door and rise through the ranks, if you will. Great training ground, great place to learn how to become a professional and to grow personally.
Hi, Howard. A
yeah.
quick question, briefly. So I was able to find the presentation. Is it okay if I just share it and go from there?
Yeah, that's fine.
Absolutely. Thank you. Just let me know how many slides I should go forward and kind
Okay,
of.
yeah. So why don't you go to slide? We've already done who we are. Why don't we go to slide 3, I guess, slide 4, or in slide 6, if you will, page 6. Sorry for the technical difficulties, folks. Okay, so I can't see the screen, but I'll say, go down 2 more. Yeah. So whether you're looking to manage IPOs, tech stacks, or anything in between, let's talk about what you're into and where you see yourself. Like I said, we rely on a range of skills and recruit from every background and major, from art history to zoology, as the slide says. So there are many different roles that you can fit in, that you can slide into or pursue in the firm. Traders, which is the group that I'm a part of, software developers, operations specialists, client relationship managers, strategists, auditors, bankers, risk managers, salespeople. I'm a sales trader, so it's a combination. Regulatory specialists, credit rating advisors, marketers, researchers, all of those things make up who we are and what we do for the various clients that we have. You can go to slide 8. We're skipping we're going to every other one. So as I said, we're a global firm. We're throughout the US. We have an office at 555 California for those who are on the 555 California Street in the Bank of America building. For those of you who are on the Bay Area and are in the Bay Area and familiar with the Bank of America building. And obviously our headquarters is in New York. We have a headquarters in London. We have Hong Kong, Tokyo, Singapore, Australia. We're in Latin America, Brazil, Argentina. We're in South Africa. So, offices all over London, Paris, Frankfurt, just lots of opportunities to work in various offices. And as you see, you can go about anywhere in the world. And there's opportunities for you to grow in those various segments or various locations. So once again, you can go to slide 12. So what do? We're a banking and securities and investment management firm. We provide a range of financial services. Our clients are corporations, financial institutions, governments, and individuals. And what we do is find ways to meet those financing needs. Folks who have money and are looking to invest, we help to pair them with those who are looking to raise money and are looking to provide a return to those who are looking to make those investments. You can go to slide 14. Yeah, thank you. We find solutions through financing businesses, transacting for clients, which is what we do we do that in sales and trading as well, advising companies in the investment banking division, managing assets, which is part of the asset management division, researching global markets, which is part of GIR, Global Investment Research, and supporting markets, actually doing the trading that is necessary to provide for a smooth functioning market. So at this time, I'd love to just go into a little bit of financial markets. Why don't we go to slide 16, if you will. You can go ahead again. Sorry, thank you. So markets, we help to match those who need to use money with those who want to invest and lend it. Financial markets provide essential economic benefits for folks who are looking to save and invest, raising money through equity and debt, funding innovation and growth, funding public projects, So innovation and growth, if, obviously we have, not obviously, but, we're in the area, we're in Silicon Valley or close to it in the Bay Area. And so companies who are looking to raise capital in the public markets or pre-public markets, through venture capital, through friends and family, whatever it may be, biotech. We have a significant biotech and nascent or early stage biotech and well-developed biotech market, in addition to technology firms. And so those companies are always looking to raise capital in their formation, in the capital formation process. And we are able to help them do that through debt markets and through equity markets. For public projects, we help to raise municipal bonds for counties and municipalities that are looking to raise money. If the city or the state of California is raising money to build a bridge, to renovate the Bay Bridge like they did several years ago, I'm sure they raised money in the bond market to facilitate that and paid interest for that. So that's a sort of that's an example of a public project that would be funded through the capital markets. Fund industrial development, companies looking to invest in growing their infrastructure, cities and counties looking to invest in their infrastructure. So all of those things are things that all of those functions are what we serve in terms of helping to develop markets and to develop the economy. If you're looking to procure resources in commodities, trade internationally, currencies, and managing risk and uncertainty. So we would do that in the financial markets. So once again, it's helping capital is transferred from people who have it to investors, people who need it. Risk is transferred also. We help to do that. People who have it but don't want it, and then there are folks who want to have risk and want to get paid for it. And so we're pairing investors, those who have spare capital, with issuers, those who are looking to raise money. The investors provide an investment to the issuers, and the issuers provide a return on investment to the investors. Capital markets are, I think you can go to the next slide. Continue, thank you. So traditional capital markets, or I'll stick with this one. This is an example of how we bring different functions together. A leading global sort of an analogy, leading global online retailer, the network effect, high consumer traffic generates rapid turnover in goods, efficient pricing, and ultimately more traffic. The global markets sort of, the similar function is that we have active client networks that generate significant flows, which beget additional flows, partially as the network expands. So we have, so many clients on the institutional investment platform, and that allows us to bring buyers and sellers together in an efficient way because we have a significant distribution network and have relationships with those various clients. And it allows us to provide for efficient markets in-house. We hear similar to in a global online retailer, they warehouse inventory to sell directly to buyers. And we have the principal model. We manage an inventory of securities. And so when investors are looking to buy or sell in the secondary market, they are able to come and get and able to invest in those particular instruments through our inventory. And if we don't have it in inventory, then we can match it off versus other possessors of that capital in the agency model. And so just like a leading global online retailer, let's say Amazon, connects retailers directly with consumers, we are able to match buyers and sellers when the conditions are met. So if mutual fund A wants to sell a particular stock in Walmart and they are looking to move significant blocks of stock, they can come to us. And when I say significant blocks of stock, I'm, in Robinhood, folks are trading fractional shares or, 100 share lots. whatever it may be, a few $1,000s or a couple $100,000. When we're dealing with these institutional asset managers, hedge funds, pensions, endowments, and the like, or high net worth individuals, we're trading multiple $1 million trades, $100 million trades, $1 billion trades. And so they are in markets, when you are trying to move that much inventory or move that much capital, it has an effect in terms of causing dislocations in price. And so our objective is to find a way to provide liquidity. And liquidity means we want to not minimize the impact on price. And so in the supply and demand model, if demand significantly outweighs supply, it can drive the price up. What we try to do is pair the demand with supply, trying to figure out where it's going to match and hopefully minimize the dislocation that may occur in a particular price. Does that make sense to everyone out there? I don't know if anyone is able to respond. Yes, okay, great. Primary trading. Just like online retailers distribute new products, we distribute new securities. So recent IPOs, Coinbase is an example. Zevia is a consumer products drink company. Obviously, other IPOs that you are probably familiar with, who are recent. Facebook was several years ago. Snapchat it was a couple years ago. Those are IPOs that came, and so those are sort of new releases, if you will. And that happens in the bond market as well. We also, the online retailer also sells used products at discount prices. Just like we talked about before in terms of pairing buyers and sellers in an agency model, we provide active two-way markets in securities that are already issued. And so the equity markets globally have, or in the US in particular, have securities that are already traded, and they're trading hands each and every day. And folks have an opportunity to buy, and folks have an opportunity to sell. And so we're providing active two-way markets in securities that have already been issued. We build technology to deliver seamless, to help price products and to manage risk. And so that's a significant function. It used to be done all by hand and by humans, and obviously technology, we want to embrace technology to help make our jobs easier. And so we're able to better manage risk and ascertain the factors that drive performance and help manage those and help mitigate risk, if you will. And so technology helps with that. Just like the global online retailer develops algorithms for search and advertising, we develop algorithms for pricing, execution, and hedging. And so we use technology to figure out, when we think about pricing securities, we think about price, we think about average daily volume, how much volume has traded in a particular stock, and how much. And so if a client comes in, for instance, to buy, let's say they want to buy 100,000 shares of a particular stock, and the average daily volume is the number of shares that are traded in a particular stock on a given day. It all depends on which stock it is. So if you're buying 100,000 shares of a stock that trades 100 million shares a day, then it's not that significant. It's a small portion of the daily volume. But if the average daily volume is, let's say, 100,000 shares, then you're trading one day's volume, and that can cause a significant price dislocation. And so that's a factor that's considered. How much volume are you trying to move, and how would it impact the price of a stock? So we use algorithms that take those things into consideration. What's the depth of market? How liquid is it? Breadth of service. We offer a broad range of financial products on a global basis, including research, execution, and clearing. And so we bring those all together to help provide those services to our clients. And in contrast, like the slide says, to the online retailer, we transform the underlying products to meet our clients' needs. And so instead of just buying what you need off the rack, you can get it done according to a particular price, we can put baskets of stocks together to help you express a view in the market. Let's say that you are an investor and you believe that blue states are going to outperform red states. You could potentially buy stocks in California, a basket of stocks in California, New York, Massachusetts, and sell a basket of stocks in the Sun Belt, Texas or North Carolina. Little things like that that you don't necessarily think about as an outsider looking in, but there are all sorts of themes. You can think about those that will benefit from inflation, as we've seen prices increase. So you think about companies that will benefit from rising prices versus those who will lose. And so if you're exposed, if commodities are a significant part of your costs, and as they go up and you're not able to raise prices as fast as commodity prices are increasing, then your stock may suffer. But if you're selling commodities and extracting them, then and the commodities are rising, then you have an opportunity to outperform. And so there are ways to express that in the market as well. There are many different ways to sort of capture themes, express them in the marketplace. And so we can package those securities together to help a client express that view. Let's go to the next slide, please. So once again, we bring the various parts of the firm together to help with that investment process. We have investment banking, which focuses on technology, industrials, or divided along those industries: technology, industrials, media, banking, and healthcare. So serving technology companies, serving industrials and materials companies, media, banking or financial institutions, and then healthcare, including healthcare providers, biotech, pharmaceuticals. All of these companies need to raise money. If Pfizer is building a plant, ramping up a plant, and they need to, as they're ramping up production of vaccines to combat the coronavirus, they may need to raise some debt. And so they will come to an investment bank and raise some capital to help build that factory so that they can get that work done. And so they will approach investment banking. Investment banking will then take those securities and go to global markets and issue them in the primary markets and look for investors who are looking to invest in, looking for a return. And so they're willing to take some risk. And so Pfizer, for instance, and this is just an example, would come to banking. Banking would then come to global markets, working through equity capital markets or through the fixed income market, and then issue that debt, and invested would come to Goldman Sachs or whichever bank they use. Generally, it's a syndicate of banks, and would be able to participate in that offering. Global investment research would actually provide some sort of research basis for the instrument, some sort of analysis, so that asset managers and hedge funds would be able, and governments who are interested in participating can learn how to can learn about the product and do their own analysis. So global investment research is able to provide those services on behalf of the firm to the clients who need them, sort of helping to helping investment managers make their decisions, if you will, as they have to take a number of inputs into consideration. So once again, price discovery is important. Liquidity, idea generation, these are the services that we provide in the global markets platform. Risk management, trading tools and analytics, price discovery. Once again, if you're looking at a security and you want to move a particular block of stock, if you want to buy or sell significant shares, you have to figure out what price it's going to be. what we look at often is the bid-ask spread. And so if you were to pull up a particular security on Bloomberg or on Yahoo Finance, you would see the last price. There would be some sort of spread. And you have to think, where would you, if you're looking to buy one share, obviously you can buy that on the screen. It's pretty simple. But if you're looking to buy $100 million worth of stock or sell $100 million worth of stock, the screen is not necessarily going to, the screen market is not necessarily going to accommodate what you're doing. And so we help to figure out where that price is going to be, what that price is going to be for a particular block of stock. And we do that by knowing where the buyers and sellers are, or basing it on a number of other factors, such as what's the average daily trading volume, how much does the stock typically move in a given day, assuming that there's no new information or no new news out. And so we can price it based on that information in addition to the normal sort of volatility pattern. Yes, so how does the stock move in a particular day? And the type of buyers and sellers that have been playing in it. So thinking about that, thinking about the type of the trading that we're seeing. Is it a bunch of one share lots, or is it a bunch of blocks over 1,000 shares, 10,000 shares, 100,000 shares? So thinking about that, liquidity is not necessarily representative of volume. And so as you see as you've all witnessed, I assume, the meme sensations that are taking place in the market. And so retail investors and meme sort of folks who are in these chat rooms are driving the price of stocks. And they're often moving away from the fundamentals. And so you see names that institutional communities have sort of given up on, and retail all of a sudden, sort of put some life back in names. GameStop was one example. AMC is another example. And so you see a lot of volume, and but that doesn't necessarily mean that there's a whole bunch of liquidity. And so we are able to, and by that I mean that you'll see 1 lots and 100 share lots, but you won't necessarily see blocks of stock, which is what we specialize in. And so we want to find where the blocks are trading so that we can maximize liquidity for our clients who are looking for liquidity. Idea generation. We always Goldman Sachs prides itself in our competitors. We're always competing on ways to help clients, help them express those views. And so, like I said, we have this custom basket product where we're able to create different themes that would bring a basket of stocks together for a client to express a particular view. And so if you want, like I gave the example before, if you want to invest in stocks that are going to benefit from high inflation versus those that are going to lose, and sell short those that are going to lose because of high inflation, then that's a theme that you can express in the marketplace, and we can help give you that. We can generate an idea around that and provide a product. We help with risk management, and we provide trading tools and analytics via various platforms. Marquee is one of them. So once again, we're active in all major asset classes, offering clients the opportunity to trade in cash or derivatives. We use derivative products to develop customized products for clients, which address unique risk exposures or objectives. Our product and revenue diversity improve our risk profile and help us deliver more consistent returns. And so we're active in equities, single stocks, options, indices, futures, variance swaps, lots of different examples where you can, where lots of different products where folks can get involved with in the equity markets. In rates, we have government debt, we have commercial paper, agency notes, vanilla swaps, futures, repo, lots of different products in that space as well. We have global currency and emerging markets. So FX, spot FX, forward swaps, NDFs, options and exotics, credit and mortgages, corporate debt, mortgages, liquid indices, single name CDS. These are all sort of things that you will get to know or learn about as you progress. But there are ways to do it. You can begin to read up on it and begin to expand your knowledge. Commodities, we're also active there, cash settled and physical, futures, options, indices, swaps, and structured products once again. Another thing I would say in terms of, and this sort of goes with the product coverage, there are different ways that companies raise capital. And so money markets, which would be commercial paper, short-term sort of non-permanent funding to fund short-term products, that's sort of 0 to 12 months. So that's one sort of, that's one area of the investment time horizon or funding horizon. And then there are debt markets where companies or governments are issuing 1 to 30-year or even longer term bonds or debt instruments. So medium to long-term non-permanent funding. And then you move into equity markets. These are perpetual sources of funding. They're longer term and they're permanent funding, if you will. So once again, markets are organized in primary markets, secondary markets, and then clearing and settlement. Primary markets are when issuers issue stock or bonds, and those are new issues, as we discussed earlier, or new offerings. And then in the secondary markets, that's where securities that have already been issued are trading hands. You have cash markets and you have derivative markets. So cash markets are where you're just trading the standard security, shares in ABC company, go back and forth, and that's just a cash market. It's a cash transaction versus derivatives where you can trade options, futures, baskets, and oftentimes those derivative products settle over the counter, which is a bilateral agreement between the client and the broker, versus a cash product, which is settled via an exchange. And so, or transacted on an exchange and then settled in a clearinghouse. And so you'll see that as you follow that slide, not to get into the weeds, but the derivative markets will trade bilaterally between client and the brokerage house. And then the brokerage house is sort of the contra, if you will. They are the ones, if a client enters into a bilateral agreement, the risk is with Goldman Sachs or with the broker that they're interacting with. If they settle a trade with and it clears listed, meaning it's a cash trade, then there is no risk with the counterparty. It's just a clean transaction, and cash has traded or changed hands, if you will. All right. How do we deliver services to our clients? So we onboard them, we help generate ideas, figure out what they need, help them to express those ideas in the market. Then we help them to execute. We send them confirms. This is what you've done, so they have a physical record. And then we settle and clear those trades. And so in the previous slide, we saw either a cash transaction or a derivatives transaction. And so settlement and clearing, that's all part of the process. It's something that's very important. And there are jobs in all of these various functions. At a firm like Goldman Sachs, we're servicing clients all over the globe on the institutional and the high net worth in the high net worth area and investment banking. And so you have to onboard them, you have to service them, provide ideas, help them execute, help them, and then the follow-up, providing the confirms, providing settling and clearing. And so there are a couple of things that we do, a couple of platforms that we use to help clients make those decisions. And, we have all this technology that we've invested in, the Marquee platform to deliver our content. And so over the years, we've been able to develop ways to manage our risk and ways to analyze certain scenarios. and provide research. And so all of that information was in-house, and we would deliver it to clients via salespeople. But now we've sort of just like, thinking about how do we better serve clients or make it more accessible in a world that is becoming more and more transparent. We are able to provide technology solutions that clients can access on their desktop and allow them to analyze risk, to put portfolios together, to get pricing on portfolios of stock or bonds. And it helps them to sort of do their work in-house and then come to us for the execution, if you will. And so it's just another way for us to provide a customized solution for clients. Additionally, Symphony is a messaging service. So we're able to, we communicate on a number of different communications platforms: email, telephone, Bloomberg, Symphony. All of these are ways to communicate with folks and help get ideas out. And Symphony is a secure messaging platform similar to Bloomberg, but we are able to provide those services through messaging platforms as we interact with clients. A few more things about the investment process. You don't have to go back. We can just sit here for a second. So investors are always looking for, they're looking for a return on their investment. So when they're looking to invest, they're either looking for income or growth. When they're looking for income, they want to invest in companies that are providing a dividend, or they're looking to invest in bonds which pay some sort of interest payment. And so those are ways for investors those are a couple ways for investors to get some sort of yield off of some income off of their investment. And then there are growth investors, folks who are looking for capital appreciation. And so you're not necessarily looking for income, but you're looking to see that which would be paid out in quarterly payments, but you're looking for stocks or bonds that will appreciate over time. And so you're looking for a combination. And so investors will look to when they consider an investment, they're trying to figure out what they're going to do, how they're going to approach it. And so income or growth, or income or growth, exactly. And so just to give a little more color, the shorter the time horizon that the investor has, the lower the expected rate of return, versus the longer the investment horizon, you're expecting a higher rate of return. If a company is a lower risk company, if perceived to be a lower risk company, then your expected rate of return will be lower. But if you go further out on the risk curve, if you think it's a small company that's looking to raise capital, then you're likely going to anticipate or expect some higher rate of return, because you're taking on a higher level of risk. Hopefully that's clear. Okay, so let's go into the Goldman Sachs experience, and we'll just do this real quickly, and then we'll move on for any questions. We're at 45 minutes. I'll give this 5 minutes, and then we'll open up to questions and move on from there. So once again, purpose in everything we do, we are helping to, financial markets are necessary. They provide the engine for growth in our economy and the global economy. Folks who are looking to companies, municipalities, countries, looking to raise capital, whatever it may be, to fund growth. We are here to solve those needs, or to help provide solutions, if you will. Great ideas come from everywhere, where we hire folks who are always looking to innovate, to create, to apply some creativity to financial services. And there's room for creativity. There are ways to find solutions. There's not a cookie cutter solution for everything. And so we try to find solutions that will fit a client based on their needs. We are a consensus driven culture. I would say that people at Goldman Sachs make time for folks who are coming in. And so if you're looking for a place that will invest in you, give you an opportunity to have mentors, to develop relationships, and to really learn and grow, this is where you want to be. I would say in financial services in general, because it's just a place where people are driven. They take the time to teach people, and that's definitely part of the Goldman Sachs culture. Not to, it's not about making this a commercial, but just our experience. We invest in our interns, we invest in our young people, teaching them. It's a apprentice driven sort of model. So young people come in, they learn from the senior folks, and they are nurtured and taught and given opportunities to grow, given responsibility at an early age. And so early in their careers. And so it's just a really good opportunity for you to grow. And once again, diversity is important. People from all walks of life, people from different backgrounds, socioeconomic, racial, religious, country of origin, region, whatever it may be. There's just a fair amount of diversity. We're looking for the best talent. We're looking for people who are willing to work hard, who are eager to learn, who are willing to expand their horizons, and willing to work really hard. Anything else on it? Talked about that already, so we can go. Making time for folks, absolutely. Lots of different perks at the firm, workout centers, opportunities to have some decent work-life balance, which has become more important for the younger generation. We can continue. And there are other ways to express yourself. Analyst Impact Fund, ways to drive innovation, analysts getting involved in things that they are really interested in. What else? Next one. Affinity Networks, Asian Professional Network, Firm-wide Hispanic Latino Network, Disability Interest Forum, Firm-wide Black Network, LGBTQ, Women's Networks, and other affinity networks. All of those things, all of those networks are available. Investing in communities, community teamworks, 10,000 small businesses, 10,000 women, impact investing rather, Goldman Sachs gives, and sustainability. All right, we'll end it there. And if there are any questions, we're open. I hope this was helpful. Hopefully you've learned something. And if you have questions, please feel free to fire them out. I talked for a long time. Didn't intend to do that.
No, thank you so much for the presentation. It was really informative, and I actually learned a lot.
Did you? Good to hear.
Yeah.
Thank you, Shalom.
So, of course. So let's move on to Q&A session. First, we have, I know Ruben kind of sent in this question earlier during the session. He's trying to ask if Mr. Howard, you have any office in Mexico City.
I would assume we have some office in Mexico City.
Okay.
I would assume. I can't say for sure, but I would have to suppose we have some office in Mexico City. Yeah, that would make sense.
Gotcha. Okay. All right, next question. We have it from Anantharam. Sorry if I butchered your name, but he asked, can you explain blue and red stocks? I think it's probably just differences.
Difference between which stocks?
Blue and red stocks.
Blue and red. Oh, when I said blue states versus red states. So, I was sort of speaking to the whole custom basket creation. So if investors have a particular theme, like we in our global markets division, we have a particular product called custom baskets, and it allows clients to express views on baskets, on portfolio or baskets of stocks. And so if, for instance, let's think about blue states versus red states. And this is one sort of simple way to look at it. And blue versus red from a political standpoint can be reflected in tax policies. And so we have high tax states versus low tax states. And so high tax states, New York, California, Massachusetts, Illinois, those are sort of blue states. And you have companies that reside in those states and they pay higher taxes. And some may think that that's a bad thing. So you can short the high tax states and stocks that are domiciled in the high tax states versus buying stocks, companies that are moving or expanding into low tax states. Companies are moving into Texas and Florida, where there's no state income tax. And so companies go down there to save money on taxes. And so that will probably help their bottom line. And so if you have a particular view that companies that have higher exposure in low tax states, which are generally red states, then you can get long those red state stocks and short the blue state stocks. And if you feel otherwise, you can get long the blue state stocks and short the red state stocks, if that helps. All right. That's just an example of a theme that can play out in the market.
Got it. Thank you.
Okay.
All right.
Oh, thank you. And Anantharam. Yes.
I think you did better than me for the name.
Yes. Yes.
And then we have Cinderella, who's asking if it's possible that we could get your LinkedIn contact for personal questions later after the session.
Yes, you can. Yes, you
Okay.
can.
Right, cool.
Howard G. Lindsay, I think, on LinkedIn.
Okay, we just want to get your permission and then we can send out the
Yes, you have permission to reach out. Absolutely.
Okay.
Absolutely.
Okay, cool. Awesome.
Yeah.
Awesome. All right, moving on to the same person, Anna Thrum. What are some of the skills or financial expertise or knowledge that is desirable within investment banking division?
Strong analytical skills. Have to know Excel and the various functions that you learned that you guys kind of grow up with these days. And so being able to bring those computer skills, technical skills together, being able to process lots of information, being able to present, not being afraid to share your ideas and be willing to communicate those ideas. So strong communication skills, strong analytical skills, willing to make decisions and back those decisions up, willing to build relationships, a willingness to work hard and to learn. I know that's not necessarily a skill, but it's a character trait that matters more than anything, you know? And so you have to be really willing to learn, improve, take feedback and grow, and put yourself out there, be willing to take some risk. And yeah, that's what I would say. Got
it. Yeah, I know for investment banking, it might be a little long hours than other fields.
Absolutely.
So definitely willingness
Absolutely.
to do that. Yes. Yeah, I agree with you.
Yeah.
So moving on, I know that you kind of mentioned about Goldman Sachs work-life balance. So could you explain a little bit of more how Goldman Sachs is helping analysts who are just joining the firm to maintain that healthy work-life balance?
I think I can't speak directly to it, but from what I've read, there was a time when, investment banking, if bankers would work 7 days a week, easily 100 hours. And so I think we've reached a point, if you've read up, I'm sure you probably have, where some young analysts presented some information on why, how out of whack or how out of balance the demands were. And so the firm has made more accommodations for those younger folks, and have restricted the hours on weekends, which is not to say no weekends, but it's not the expectation is not that you're going to work 12 hours each day, each Saturday and Sunday. I think there's an expectation that you'll take one of those days off, which is new.
That's good to hear. Good to hear.
Yeah.
Thank you. All right, moving on. So how would investment markets evolve during and after pandemic era?
How have markets evolved during the pandemic era? I think, there was a time when we would never, for trading in particular, we were tied to our desk. I've been doing this for 20 something years and older than you guys have, before you guys were born. And, the thought of working from home never, ever, ever crossed was not even a concept. Not
so you're learning as well.
Yes. So we Goldman Sachs, gotta applaud the leadership or give a nod to the leadership from early in the pandemic, gave people work from home kits, and we were able to figure it out and replicate what we have on the trading desk at home. And even though we were all in different locations, we were able to get business done and get it done really efficiently. And so I would say it allowed for greater flexibility and enabled us to still meet client needs in a really, really volatile and high volume and demanding environment, stuff that we never thought would happen. And so we were able to raise capital for clients, meet their needs, not shut the markets down. And so that's a testament to resilience, to creativity, to innovation, a willingness to adapt. And that's one thing that, that's kind of admirable about the financial services industry. It just adapts, continues to adapt, continues to adjust.
Definitely, yeah. I think I saw a news about Goldman Sachs used drones to execute a trade. Yeah, it was really interesting to see. So I definitely see your point.
Yeah, and that's younger folks coming in. And even older folks, whatever it may be. There's always a creative solution to a challenging problem. And you don't have to do things the same way you've always done them. We're looking for folks to think and to apply creativity and find ways to do things better, which is, I think, a wonderful thing for a company and an industry to really embrace. Because if you're not innovating, growing, changing, then you're probably dying. Or you're going to be left behind. And so in order to stay ahead of the curve, you have to be willing to go through some creative destruction and be willing to let go of old business models and embrace new ones.
I agree. Okay, moving on to the next question. We have, so this question is, any tips for people who have graduated from college less than 5 years and looking to join the field?
Yes, network, build a relationship, figure out where you might be able to get into the firm. There are ways to do it. You just have to network and figure out exactly what you want. There's a war for talent, as you probably read the headlines. And so folks, there are more jobs than there are people. And so you just have to work your way in, be willing to follow up. Follow up is key. People are busy, and so they may not respond every time, but if you stay in front of them and begin to have coffees and get introductions to other people, then you can begin to learn about the business. Get on the firm website, see what may be interesting to you. You saw all the divisions that were pointed out early in the slide presentation, just ways that you can get in. And so if it's in technology, if it's in operations, if it's in sales, if it's in private wealth management, corporate services, there's just so many different ways that you can get in. And so it's just a matter of figuring out what interests you, having learning about it and pursuing it. And if it's not here, then, at another firm, but at least you begin to learn the needs that are there and figure out how you can fit in and work your way into the firm and the industry.
Got it. Thank you. I agree with you. Networking is really important.
Yes. Yeah.
All right. So moving on to the next one. So the question is, what are cleared trades and uncleared trades in the clearing and settlement portion?
Yeah. So it's the difference between a listed trade, meaning that it's a cash market versus the derivatives market. And by derivatives, meaning and more than derivatives, OTC, over-the-counter market. And so a cleared trade requires going through a clearinghouse, and the money is, there's no sort of counterparty risk because the money goes into a central clearinghouse and the buyer gets his money, the buyer pays his money, and the seller gets her money automatically or upon settlement, versus a bilateral sort of over-the-counter trade. The buyer is matching off versus the brokerage house, and there's going to be a stream of payments over the course of that trade. And so it's going to be settled over time, if you will, and not necessarily upon settlement date. Settlement date is generally T+2 in the cash markets in the US. And for the OTC products, there's going to be a stream of payments one way or the other, depending on how the product is structured. So it's not necessarily cleared.
Thank you. All right, moving on to the next question. Do you think that the Fed rates will increase in the future? That's $1 million question.
Yeah, they will have to go up at some point. Tapering is something that folks are waiting for. The quantitative easing, the bond purchasing program that the Fed has been engaging in. Yesterday, the markets were roiled or Wednesday, the Fed minutes were indicative of some sooner than expected tapering, and that was sort of the same thing yesterday. But earlier today, one of the Fed governors, Kaplan, sort of indicated that he may be, and he's generally a hawk, and he sort of wavered a little bit in his stamp viewpoint. And so the expectation is that, it's a wait and see sort of thing. Rates may go up in October, not rates may go up. I think tapering may take place earlier rather than later. At least that's what the market's interpreting. December versus October or November. I forget which one, forgive me. But rates will eventually have to go up. But the markets, the timing on that, I'm not sure. The market sort of indicating that they're lower for longer. And in fact, we raised our S&P target estimates recently, simply because we're anticipating rates will be lower for longer. And so growth investments will continue to outperform in our estimates.
Got it. Thank you for that answer.
Yeah.
So moving on to the next question, what is the biggest challenge you faced while working?
The biggest challenge about working. I think, if there's one bit of advice I would give is just to always learn, always seek to improve, figure out, keep a daily journal on what you're learning and how you can grow, what benchmarks you're going to be watching. You want to be able to articulate thoughts and ideas about the market. You have to, when you come into this business, you are going to be a resource to investors, to clients. And so you have to be able to provide information, have an opinion, form an opinion, an informed opinion. And so you have to learn and figure out that process and develop a process, be committed to that process. The people who succeed are the ones who are able to gain trust, build relationships, and those relationships based on trust are, driven by you being a steady hand, having answers, being willing to say, I don't know the answer to that question, I'll get it and come back to you. So you have to be willing to do that. Be willing to work hard, and once again, be willing to take risks, to innovate, find ways to think about ways to do things better. Markets, the world is constantly changing and evolving, and so the advice would be to be willing to change and evolve and to grow, figure out how to do things better, build relationships, network, and yeah, that's what I would say.
Thank you. So going back to networking, one of the questions is asking, can you tell us what is the most important aspect in networking that can lead to referrals, especially for asset management internships?
Meeting people who are in the industry and asking for introductions, or developing a relationship where people will actually say, hey, this kid wants to learn more. Is there someone that you can ask the question? Is there someone that you could recommend that I speak with to learn more? Or reading up and learning on it, and having intelligent questions to ask when you meet people. So when you're networking, you're not just, coming by to say hi, but you have some questions in mind, and you want to figure out how you can learn and what you can bring to the how you can grow, and follow up. Follow up is key. Keeping people up to date on what you're up to as you go through the process, and just demonstrating willingness to learn and to grow. And in terms of specifically for the asset management industry, it's meeting people, once again, following up, and letting people know what you're interested in. And hopefully folks who are in the business will take a liking to you, see your desire and your willingness to follow through, and hopefully make some introductions for you so you can get an opportunity to meet people on that side.
Got it. Thank you. So we have a last question. It's more towards a recruiter's question, but it's asking if Goldman Sachs is offering internships for people in a foreign country.
I'm pretty sure there are. Depends on the foreign country. We have offices throughout all over the world: Asia, Europe, Australia, South America. I'm sure there are internships. I don't know what they are, but takes a little work, and I'm sure there would be some opportunities. Depends on the country.
Yeah, and I know Goldman Sachs internship opportunity has opened on July 1st. So for whoever who's looking for opportunities, they can look it up online.
Yes, absolutely.
Yeah.
And apply early, because those jobs go very quickly, and so you want to make sure that you are in the early batch of resumes that people are going to look at and screen.
That is correct. All right, so we have another question that just came in. It asked, what made you pursue the area of finance over other areas? What are some experience and skills that prepare you for this job when you first started?
The internship that I did placed me in sales and trading. And I'm glad they did. It was a really good experience. And once I did it, I knew that that's what I wanted to do. And so I would say that, as I said earlier, being on the trading floor, being in that really competitive, fast-paced, high adrenaline environment just really spoke to me, just really resonated with me. And the opportunity to compete, the opportunity to find ways, find creative solutions for clients, ways to deliver value. I was an economics major, love history, love, the study of social sciences and seeing it all play out in the markets, seeing reactions, responses, and how they're all interrelated, just really interested me. It's different than investment banking. We're not creating pitch books. We're not doing a whole lot of modeling, though there is modeling on the trading floor now, a lot more. We hire strats, engineers, folks who are finding creative solutions to problems. And so there are lots of different skills that you can bring to a trading floor. But being able to build relationships with clients, being a personable, being a people person, yeah, that's important in terms of the sales aspect of the job. So is that a skill? Yeah, you can nurture that skill. You have to be willing to ask questions, be engaging, look people in the eye, provide a firm handshake, sit down and be able to talk to people and develop some sort of rapport. And so that's people skills, emotional EQ, if you will. Those are things that you need to develop, and learning how to understand people. And you're not going to understand everyone because you're not going to get along with everyone. But to the extent that you can, you find folks that, as a salesperson, you have to find, your job is to figure out how to add value to the client. It's how to solve problems for clients and add value to their day. And you do that through understanding the client needs, understanding how the client wants or needs it to be delivered, and then figuring out how to help them access the resources or navigate the firm, because the firm has invaluable resources on so many different levels, so many different experts. And that's one of the beautiful things at Goldman Sachs. We just have so many different folks who are passionate, intelligent, driven, and you can call on them to help you solve problems and deliver information, perspective, and advice to clients.
Got it. Thank you. Yeah, I know when I talk to some people from Goldman Sachs, they always say that, yeah, you work with people who are very hardworking, but also very smart people. So I definitely can see your point.
Yeah.
So we're going to take the last question from Aaron. So his question is, and then we're going to wrap up the session. Thank you so much for your patience. I know we went over a little over,
No worries.
but the last question is going to be, do you think right now is the right moment to build a portfolio based on ESG investment?
Say that one more time, if you don't mind.
Is right now the right moment to invest or to build a portfolio in ESG investment?
Is now the right time? I would say that it's gotten more and more folks are interested. ESG is gaining more and more momentum. You think about what's happening with ExxonMobil, recent moves there by Inclusive Capital, I believe, or Engine One, I believe. Folks getting together and sort of forcing companies to really, look into the future and not just stick their heads in the sand and be committed to, doing things the way they've always done them. That's not a recipe for success, not in the long run, especially when the environment around them is changing. So we have to begin to think about ways to grow. And so, ESG is trying to find creative solutions to a very complex problem, but a problem that impacts all of us. And so to the extent that we can find solutions that will help companies think longer term, then I think that, there's definitely, why not now? Oil, oil and energy space, folks are beginning to really rethink how they approach that business. And so why not? I think it's important to have some exposure there. Yeah.
Got it. Thank you. Yeah, definitely. I can see the recurring theme of always trying to improve and evolve and find
Yeah.
it. So yeah, find solutions. Yeah. So thank you so much, Mr. Howard Lindsay. We really appreciate your time today. I know our program director is going to send out a follow-up email with you regarding the session. And so with that, we're going to wrap up this session. Thank
Okay.
you so much again.
Thank you. Take care.
Thank you. Have a great one, everyone.
You too.